Sanofi is a global pharmaceutical company with over 100,000 employees in more than 100 companies. So is the healthcare M&A space heating up again? And what can we expect from that sector in 2012? Joining us now, Viehbacher, CEO of Sanofi. Welcome. Thanks for joining us today.
Nice to be here.
Now, you expected 2012 to be a rough year. Expiration of patents and getting squeezed on the cost side by governments and others trying to control healthcare costs. Nearly halfway through 2012, what's been working for you?
You know, in our industry, unlike some other sectors that don't always see economic downturns coming, patent expires are something we see for 5 years. So I became CEO of Sanofi 3.5 years ago. 17th of May was already written in red in the calendar. Plavix goes on that, one of the world's biggest products. We spent the last 3 years really devising a different strategy, building on growth platforms. We did the Genzyme acquisition. That's really what's propelling the first quarter and the
growth going forward. So the new Sanofi, as you refer to it. Emerging markets, you've called that it's been called the single biggest opportunity for the whole pharmaceutical industry. Your revenues are about 30% from emerging markets right now. What kind of growth are you expecting that? What does it look like going out a few years?
We're pretty much forecasting double-digit growth between now and our midterm guidance period, which is 2015. You know, there are going to be, between now and 2020, 600 million new people in China and India alone who have an income over $25,000. Those people all need health care, and you're going to see a huge opportunity in health care everywhere in the world. Diabetes is growing everywhere as lifestyles change, the aging population, emerging middle class. So for us, emerging markets is extremely important, and nobody is more present in those countries than Sanofi.
And which markets in particular are you seeing the biggest growth?
You know, everybody looks at BRICS, but you know, there's a whole big wide world out there beyond the Brazils and the Chinas of this world. Markets like Colombia, markets like Vietnam, Indonesia. So Vietnam is a country of 100 million people, and those economies are starting to grow. So, and what we have seen is that as GDP grows, people spend more on healthcare. So I think the fundamentals are very strong for emerging markets.
Great. You mentioned Genzyme and your acquisition of Genzyme. How is that acquisition helping fuel your growth? It's now pretty well integrated into the company, and you should be clear soon, but what are you getting from that?
Well, first, the share price really responded positively towards, because I think they really saw the value creation that was in there. I mean, we're talking about the first biotech that is accretive in year one, and in year one already returns a level of return on investment equal to our weighted average cost of capital. Beyond that, it gave us an extremely important scientific platform in Boston, Cambridge, which I think is probably one of the best places to do research and development anywhere in the world.
And you're actually expanding your research capabilities in the Boston area. You're building out a kind of an innovation hub, if you will.
Yeah, both internally and externally. So we already have around 5,000 people in the Boston, Cambridge area. We're the first big pharma to create a biotech company there. We have acquired other companies. We are deeply integrated in the key institutions such as MIT, Mass General Hospital, and that's the real opportunity there.
Obviously, that's been a successful acquisition for you so far, but you said recently that you were looking for other bolt-on acquisitions. How are you defining a bolt-on acquisition? What might that look like?
So I think, you know, despite the patent expiry, actually Sanofi has got some very nice medium-term growth prospects. We forecast that we can do 5% compound annual sales growth between now and 2015. We'll probably leverage our bottom line to do better. So we don't need to do an awful lot. I don't need further diversification. But if I can buy more in emerging markets, if I can buy more in consumer health or in vaccines or diabetes, things that strengthen where we are already, then we'll continue to look at it. But you know, I think we're going to be pretty disciplined.
And you're going to be disciplined, but what about the space overall? What are you expecting to see in the M&A sector in the healthcare?
Well, I mean, M&A in our industry has really heated up this year. I'm actually quite glad that we did Genzyme last year. I mean, I think you're seeing valuations increase. A lot of people become much more interested in emerging markets. It means you just have to really look a little bit further. But you know, because 2/3 of our emerging market sales are outside of BRIC, when we go looking, we're not necessarily running into so many competitors as if you were buying in China or in India, for example. So you just have to look further, but I think there are still plenty of opportunities out there.
Also looking ahead, you're a European-based company with everything going, and I know you've been fairly optimistic about the outlook for Europe. You really think the euro survives ultimately?
You know, I think we got over 1,000 years of history in Europe, and there's a lot more of an emotional binding towards Europe than most people understand. That having been said, the European economies are extremely fragile, and a lot is going to depend on how we deal with the debt crisis over the next 6 months. So I think longer term, yes, I am opportunistic, but let's be realistic in the short to medium term.
Great. Chris Viehbacher, thanks very much for joining us and giving us an update on all that's going on with Sanofi. We appreciate it.